With an estimated net worth of $130.7 billion as of April 2024, Warren Buffett, the Oracle of Omaha, is probably one of the most well-known and successful investors that we know today. But he does have a certain set of rules that he does live by. In today's video, we're going to be going through the 6 Warren Buffett rules that can make you a millionaire and can really make you rich. Overall, Warren Buffett is a value investor. What this means is he looks at companies that are a good buy, he buys a majority share in them or a large share in them, and then he does hold them for an incredible amount of time. Now, of course, when you look at the advice that he is giving, it is always very important to really note what he is saying. In particular, he advocates for investing in yourself, in what you know, how you do it, reinvesting any of the profits, being very persistent and being very patient, analyzing risk, setting clear goals, and of course, making very informed and really strategic moves towards the goals that you have. Now, of course, when you start breaking into the 6 rules that he really lives by is what we're going to be looking at. Rule number 1 that can make you rich is not relying on one single source of income. When you only have one source of income, you are essentially not diversifying your income and putting everything into one basket. When you do that, you're putting yourself at the mercy of someone else's decision, whether it be an employer or someone else. If you only have that one income source and something should happen, if you lose it, if your income is reduced, the livelihood could be entirely forfeited at that point. So making sure with multiple sources of income, not only do you have a primary job, but possibly having a secondary job or a secondary means. But when we even look outside of that is anything that can really create you passive income. Now, this can include dividend investing. This can include some CDs that you might have, savings account, high yield savings account, any way that you can really diversify money that you have coming in and having multiple ways where if one is reduced or one is lost, you always have another avenue that essentially you can make up the difference when it comes to income. The second rule that can make you rich is focusing on investments that contribute to a positive cash flow. Now, of course, this is one of the really big things when it comes to dividend investing and when it comes to holding stocks and ETFs that are going to pay you a positive cash flow. When it comes to investing, it is really creating a secondary stream of income. Now, of course, they weren't referring to really the continuous cash flow or what we know of today, not referring to stocks or metals because, of course, they don't produce cash. We are looking for income producing assets. This could be businesses, this could be real estate. This is really important because, again, when you're getting outside of that first rule and really not having one source of income, now when you start looking at multiple sources of income, passive income can come from REITs, it can come from real estate. Again, there are multiple streams with different investments that you can be getting. And of course, never buy anything, never invest in anything that is not going to give you that positive cash flow. And of course, there's a lot of companies that if you're putting money into, they might not yield any cash flow at all. The growth factor might be there, but you want to make sure when you're investing, it is for that positive cash flow. Step number 3 is learning as much as you can. This is, of course, one of the biggest things when it comes to Warren Buffett. Reading about a book a day, if not more, really learning everything you can. And honestly, when you think about the compounding of this, very similar to what we see with stock portfolios, is when you're learning about something, let's say you want to learn how to make YouTube videos, you want to learn how to invest, you want to learn how to consolidate and pay off debt. If you spend a couple minutes every single day, it is going to compound into, an hour to a week. When you start looking and really breaking that out into a month, it's going to be kind of crazy when essentially you get that big snowball rolling, just like we see with paying off debt and knowing and exactly learning as much as you can. Now, of course, when you want to get into something new, let's say for real estate, for instance, knowing and having all of the knowledge that you can possibly possess, this might be going out to YouTube videos, to reading physical books, getting audiobooks. It might be really going through and figuring out any way that you can get information about the topic you're looking for and learning and knowing as much as you can to where you can get to a point of being a subject matter expert on that topic and knowing all the in and outs before you make a decision. Number 4 in the rules to really make you rich, investing in yourself. The best thing you can do is be exceptionally good at something or better than anyone else. Whenever your abilities can't be taken away, the things that you learn, the education you possess, the degrees you carry, They can't be taken away. They can't be inflationed away. Best investment by far is always going in and improving yourself with your skills and abilities. Now, of course, this is a huge way to build wealth. If you want to be a day trader, like we were kind of saying, go through, read some educational materials, get some courses, get really anything that you can that is going to invest in yourself. That way you can really make a good return, making good decisions when it comes to the output. And of course, that can never be taken away from you. Now, before we get into the next one, go ahead and subscribe to the channel, give it a thumbs up, and let me know in the comments what you guys think about the 6 Warren Buffett rules that can make you rich. And looking at number 5, shifting your perspective about money. This, for me personally, was the absolute biggest shift when it came to creating wealth, is really going in there. It's a very unique perspective, but when you understand the actual value of money, so it really took a while to kind of get to this understanding, is when you look at something like a $100 bill, most people see and understand what they can buy with a $100 bill. This, of course, is a complete mind shift in shifting the perspective about money, because not only seeing your income or seeing money as that $100 bill, but seeing what it can become. So what we mean by this is if I have a $100 bill and I'm putting it into, let's say, a high yield account, we're investing it into the VOO or the VUG, that $100 all of a sudden becomes $115, $120, $150. Then I put another $100, which of course is just another $100 bill, as most people see it. Now I have 200, then it grows to 220, 250, 300. You can really look at a bill and say, what can I turn this into? All of a sudden you have a $100 bill that is looking at a $1,000 bill, because of course, over time, that's exactly what it turns into. It is not looking at what can I buy with this $100 bill? Where can I spend this money? Where can I put it? For me personally, this was, again, the big mind shift. When I get $100, where can I invest it? Where can I make the most of it? Where can I provide another income stream, whether it be dividends, whether it be, interest? Regardless of what it is, I have started looking and seeking, really actively seeking where I can make more money with the money that I'm putting in there to really make a difference and grow wealth. Now, this is not just for me. This is also for my kids when it comes to generational wealth, because if you even mathematically break out some of the compounding calculators, where if you're putting away $10,000 away for your kids, you fast forward that 40 years, 50 years, when they're ready to retire, that $10,000 will be millions of dollars at that point, which is kind of crazy. And of course, not even putting many more contributions into that, you're going to be well into the millions of dollars, again, creating generational wealth just over the long term for your family. And the final one, number 6, into the rules that can really make you rich, is being frugal even when building wealth. Now, of course, despite being wealthy, when you look at Warren Buffett, he is very frugal. Now, not cheap, which a lot of people think, but he is very frugal. Still lives in the same house he bought in 1958. That is right, guys. 1958 is kind of crazy. That is a long time ago. Still lives in the exact same house. He didn't upgrade to the $1 million house, to the $10 million house, to the $100 million house. He is really in the exact same place. When you even look at shopping smart, the food, the cars, even looking at hobbies, looking at interests, he is very frugal with pretty much everything. You don't really know it and understand it with Warren Buffett. When he was worth $10 million, and this is a pretty neat story, he opted to stay in a closet at a hotel just to save money versus spending an entire hotel stay. Why think even bother? Now, of course, for a lot of people, this is going to be incredibly difficult. And when you get to the point of being frugal, like I said, frugal is not cheap. We really broke this down before in some previous videos, that when you look at being frugal and also the quality that comes in it, that is where it comes. Where when you're putting out an exorbitant amount of money for something, there better be a really good return or a really good reason, or it's going to have the ability to generate wealth. It's going to have the ability to essentially help and sustain my life for an extended amount of time. If not, I don't really want it. That is where I kind of draw my line in the sand with frugal, is buying things that have utility versus buying things that are just kind of the nice to have. And even looking at cars and things of that nature, where if I can buy a car for $10,000 or $20,000, that is going to take me through 5 years versus buying a car for $50,000 to $70,000. That essentially is going to take me from point A to point B. Just like the other car, I would rather opt for the much cheaper car, not only having no payment because we can pay cash for that one, but also having a reliable vehicle for a number of years. Now, of course, majority of people won't do this and they won't be frugal. We see the lifestyle creep, we see keeping up with the Joneses, we see a lot of different things on why people really can't or choose not to really be frugal when it comes to building wealth. And of course, once you get to the point of building wealth and seeing that generational wealth being built, spending a little is okay, but going overboard is really, really too much. When again, you start thinking about all the absorbent things you could buy, when you're talking about over $100 billion that an individual has, it is kind of crazy with the estimated net worth. So, all right, guys, so that is going to do it. Again, that was the 6 Warren Buffett rules that can make you rich. Let me know in the comments what you guys think. And as always, thank you guys for watching.